Well, good morning, everyone, and welcome to the Texas MBA's educational webinar series for 2024 and 2025. It's part of the Education and Endowment Committee, led this year by co-chairs Hannah Barton and Stephen Bertrand. I'm Scott Holtz with Mortgage Capital Trading, or MCT, and I'm a member of this committee. And today we're hosting a Realtor Roundtable discussion, Texas Regional Insights on real estate trends, NAR commission rules, and best practices. This webinar should take about an hour, but feel free to ask questions anytime using the chat window, and hopefully we'll have some time at the end for further Q&A, or you can send any follow-up questions by email to Carol at the address on the slide. Before we begin, I'd like to remind you of our upcoming in-person events. Our 109th annual convention happens on April 27th through the 29th at the Lowe's Arlington Hotel in Arlington, Texas. So we'd love to see you in Arlington. Today, serving as our moderator for the panel is my friend Tom Couture. Tom is the mortgage director and a mortgage loan officer for Texas Tech Credit Union in Lubbock. Go Red Raiders. Tom, thanks so much. And if you could take it from here and introduce the rest of the panel, that would be great.
Yeah, you bet. Thank you so much, Scott. We have a great panel of realtors today, and I'm going to introduce them to you one at a time here. First, we have Joe Atkins. He's the dude in the car right there. And
how you doing?
a little bit about Joe. He's got transactions that he's closed over $135 million. He continues to leave his mark on the real estate industry. A consistent recipient of numerous top-producing awards, Atkins prides himself on being one of the most knowledgeable, tech-savvy, and well-networked brokers in the city, which is Dallas, by the way. In addition to managing his thriving brokerage, which is called Joe Atkins Realty, he's a board member for the Dallas Builders Association. He's served as director for the local, state, and national association of realtors, and he's involved with various organizations focused on mentoring youth. Isn't that a great cause? Then we have Carly Riley. Carly's from Austin, Texas. And for Carly, real estate is not about numbers, it's about life. Buying, selling, or investing property is a considerable investment, and Carly takes her role as an advisor during these major life moments to heart. A native Texan, Carly grew up in Dallas. She attended the University of Texas, I'll forgive her for that, I promise, at Austin, before transferring to the University of Idaho, where she earned her BS degree in sociology and criminal justice. After almost 10 years of living in Idaho and Washington, she returned to Texas in 2006 to be near family. Carly's a broker associate and a realtor with Compass in Austin, Texas, with designations as CNE, SFR, SRS, RES, SDP, and if all of you people know what that means, that's great. She's very well designated here. And she's been a Platinum Top 50 Austin Award winner and finalist every year since 2013. Thank you for being here, both of you. Then we have Shally Ralph. Shally's a licensed real estate broker since 1982. Shally Ralph brings a wealth of experience and a broad body of knowledge to Better Homes and Garden Real Estate Gary Green in her position as VP of Operations and Analytics. Building upon her successful sales career, Carly's expanded her skills to include relocation services and naturally transitioned her experience and her talents into sales management now. Shally also has an impressive history of industry leadership, serving on numerous committees, task forces, and leadership positions with the Houston Association of Realtors, where she was chair of the board of directors for the 2014 calendar year. In addition, she's held director and committee positions with Houston Association of Realtors, Texas Association of Realtors, and the National Association of Realtors. Welcome, Shally. And lastly, but not least, my friend here in Lubbock, Texas, Ruben Trujillo. For Ruben, faith and family are two words that are near and dear to his heart. He's married to a wonderful, supportive woman named Haley, and together they have 4 energetic young children. Ruben moved to Lubbock in 2009 to attend school at Texas Tech University, found himself loving Lubbock so much that he now has called it home ever since. Ruben has a passion for helping people and has spent his career channeling that passion into helping his clients in various industries for over 15 years. In real estate, he's been helping families in the Lubbock area to buy and sell homes since 2017. And most recently, Ruben has launched his own brokerage called Clear Rock Realty here in Lubbock, which in 1 year has grown to nearly 30 agents, which, by the way, in our market, that's a big deal. Serving all the West Texas and surrounding communities of Lubbock. And he's just recently launched his podcast calling Leading Lubbock. So thank you all for being here. We have a whole list of questions that we're going to ask these realtors to address for us. One of the things that I was thinking about as we prepared for this is that obviously your audience here, madams and Mr. Realtors, is a bunch of mortgage bankers. So I would say if you have a bunch of complaints about mortgage bankers, maybe we can wait for another time to voice those. But as we go through these questions, maybe we can be thinking about how your relationship and mortgage banking relationships go together. That sound good? So everybody just jump in when you feel, but we're gonna, I don't know what that is. Whoops, I think Joe got a phone call, sorry. Okay, well, we'll start. First one has to do with regional insights. I want each one of you to jump in if you feel like, but the question is this: how do current real estate market trends differ across the different regions of Texas? And are there unique challenges or opportunities that are specific to your areas? Obviously, we've got some bigger metropolitan areas and some smaller local areas. So who wants to jump in on that one?
I can kick off. I can. In Houston, we cover a pretty wide variety of markets. The greater Houston area covers actually a 7-county area, which crosses over from inner city to suburban markets, as well as coastal, all the way up to the Lake Country and the Conroe area and country properties. So we have a wide variety of inventory and markets that we actually cover throughout the greater Houston area. I don't think our challenges really vary from one market to the other, except as it relates to maybe coastal property versus country properties.
It's good. Ruben, do you have something you want to offer there?
Yeah, so I mean, really, Lubbock isn't a large region, right? We're pretty well confined to certain perimeter, and it's pretty small compared to some of these other metroplexes. However, like in what we're seeing in our market right now is we have a lot of new builds. Like Lubbock is moving south in a rapid pace, and so it's interesting because we have different. What used to be, I think, in Lubbock, just one confined area, very similar homes. Now we're starting to see a lot of different subdivisions being developed. We got different price points, and Lubbock economically, we're doing well, and so we have a lot of people who are able to afford higher end homes, and so we're seeing a lot more of our $750 million plus homes being built in different areas. So yeah, it's an interesting market because we're dealing with a lot of builders, and their inventory in our MLS is growing rapidly.
Nice. Thank you for that. Well, Carly, let me ask you this. Relative to trends and predictions, are you ready to predict? So the question is,
if only we had a crystal ball.
Yeah, that's right. I used to be in secondary marketing in like Scott is, and people would ask where rates are going, and I'd say, well, my crystal ball has too many cracks in it right now. I can't really see. But the question is this: what are the key factors driving residential real estate in Texas right now? And what predictions would you make for the rest of this year, 2025 and beyond, as it relates to what driving factors?
Well, I think as it pertains to Austin, we've had a super strong market here for, the past decade up until the last couple of years. COVID kind of threw a wrench in all of our markets, I think, in different ways. 2020, 2021 sales were crazy. Every house was selling in a matter of hours. If it even made it to market, there were multiple offers on everything. And, what we're seeing is last year was pretty tough. Sales were down, not a ton, but for the Austin market, we're finally in what, a stabilized normal market should look like. But for most realtors that have done this for a while, that was a bit of a change for people. I think here we've had a lot of major employers move in here in the past 5 years, and some new ones that are moving in, specifically in the tech market. We're turning into a huge tech center. And so we already had, Dell and Apple and IBM, HP, those kinds of companies. And then recently, of course, Tesla has moved here and is taking up a lot of real estate. There's Teslas everywhere now on the roads. Oracle, Google, Meta, those have all become huge driving factors. Samsung is building a huge fab in Taylor, which is northeast of our area. And so I think for Austin, a lot of the driving factors are the tech people that are moving in. They're following those companies. And so we're seeing a lot of people move here from out of state. I think some of the challenges we're facing are we do have people that want to sell their houses that purchased them in the past 2 or 3 years. And a lot of those people are having to take a loss. I personally am closing on a property today, my first loss ever in any of my real estate adventures, but it is what it is. Sometimes we got to move on. So I think what we are seeing, and the market's already getting a little bit busier here. I think it's been relatively flat overall. I think that the numbers are down slightly, 2024 over 2023, but we're starting to see a lot more buyer activity. And I think the trends here are, you guys know in mortgage, interest rates have made it interesting for buyers. And I think the buyers here have finally accepted that interest rates are not going to drop significantly. And so they kind of were waiting. A lot of them have been on the fence. They've been waiting to see what was going to happen. Election years are always weird. So we're past an election. People kind of are settling into whatever that is going to mean for them. So we're seeing activity starting to pick up, buyer activity. Our mortgage lenders here are saying their applications have increased quite a bit in the past couple months. And so we're starting to see that translate into showings for our listings. I just launched 3 new ones on Friday, and I'm getting a lot more activity on those than I did the ones I carried over the winter. So I think for us, the tech is going to push it. Understanding the interest rates probably are not going to ever go back to where they were, but there's not going to drop significantly. So people are just having to adjust to the new payment amounts and adjust down payments and whatever they need to do for that.
Yeah, isn't that true? The affordability thing has to do a lot, not just with interest rates, but with insurance lately too. That's a big deal as far as affordability. And I think to your point, I would ask a follow-up question to the other couple realtors. Do you think that the economic climate here in all of the state of Texas, not just all this growth in Austin that Carly was just mentioning with all the different industries and companies that's come into Austin, do you see that same kind of thing happening in the Southeast Texas, Shally, and in West Texas, Ruben? Shally,
so we're still seeing quite a bit of opportunity throughout the greater Houston area. One thing that I didn't mention before, which is different from Houston and a lot of other areas, is we have no zoning. And so you have pockets of commercial and residential, and you might have mid-rises and high-rises and hospitals. And so that's an interesting, piece that a lot of people find some find challenging, some find the opportunity in it, when you come to the Houston area. Affordability is obviously an issue. However, pricing of homes in the greater Houston area still comparable to other parts of the country, and certainly I think even in other parts of Texas, still remains very affordable. Obviously, interest rates, as Carly said, have played a little bit of it, but we try to tell people to fall in love with the house and date the rate. It's just, so you can adjust it as you go.
Well, and it's hard to get, especially younger people, newer home buyers, to understand this, but a 6.5% rate is really good historically. You know, I mean, the 50-year average is somewhere around 7.75. So, but to me, and I would think this falls over into what you folks say to your clients, it's about, can you afford that payment on that house you just fell in love with? And if you can always get a better rate later on if they come down a little. Anyway, I got in the way, Ruben. How do you feel about the economic picture and how it's making West Texas grow and maybe opportunity for more loans?
Yeah, in West Texas, what we're seeing a lot right now is affordability remains a big driver here. Our median sales price is still, under 300,000, and so it is a great place for people to find jobs, to come from other places where affordability is a little bit higher, and so they're able to come in and find some good opportunities. We've had some great things happening in Lubbock with some large businesses coming in. There are no Teslas or Apple but we do have like a large cheese plant that's coming in the next, they've already opened up, I think, some of it. And there's big opportunities for people who are looking for great jobs and affordability. I think that's why Lubbock will continue to grow. One thing that I've found interesting over the last couple of months is seeing that our new listings are going down. We're not seeing as many new listings hitting the market. And so I don't know, it may be that interest rate thing, people they've got their houses at 2s and 3s, and it's really hard to let that go for a 6 to a 7. So, we do see that our business is picking up in terms of buyers, but new listings they are going down a little bit. So I think that competition is going to start to rise. We're going to see that happen again, because right now it's a balanced market. We're sitting at about a 5-month supply of inventory here. And that's pretty healthy. We actually haven't seen that in a while. It's been closer to the 3s, right? So things are moving so fast. So I think there's a lot of opportunities here. We continue to have people eyeing West Texas as a great place to start a business because they know their employees can find affordable housing.
So you guys, you'll learn throughout this that I have the gift of gab here, but you raise a lot of questions as you give your answers. And one of them is, do you think that this affordability crisis and whatnot has led more people to cash buyers? And is that still a thing, cash buyers in your markets? I ask that because of being a mortgage banker. Obviously, we want people that need loans to buy houses, and you want people to buy houses. So what about cash buyers? Are they falling away, or are they still part of the thing?
I will say for me, I'm pretty listing heavy right now. I wish I had more buyers to bring my lenders, but I have seen a lot more cash buyers coming back. We saw that during COVID. They're coming from California, Florida, New York, and then it kind of paused for a while. I am seeing more of that now. And it seems like even some of these people they're local, but they sold their houses kind of at the height of the market when prices went crazy, and they've been renting and waiting for it to come back down. And now that prices have come back down, they're jumping back in with cash. So it's kind of interesting. I'm seeing a lot more cash buyers, but then first time home buyers are coming back out. And so for them, we're seeing a lot more, lower down payment offers than I've seen in a while. A lot of them are asking for seller paid closing costs to assist with buying down the rate, or, just helping with their cash out of pocket. So for us, I'm seeing more cash coming back. We'll see if it sustains, but for right now, that seems to be true.
Yeah, cool. There's several questions on here that have to do with the newer commission rules for you folks in the real estate world. I kind of want to consolidate them a little, but so we don't take up all the time on that. But I do think it does relate to mortgage banking as well, because we have to know how to receive those on the contract. So first one was, how are these changes impacting the way you approach business and client relationships? And I would add to that, for one of you to answer, the next one was, how are you addressing their concerns, the client concerns about transparency and the structure of real estate commission under the new NAR rules? If Joe was here, he'd probably have an answer for that too. But Ruben or Shelley, do you have anything to add to that?
Yeah, I would say here, yeah, I could go for it. Really, there hasn't been a lot of change in the way that the real estate transactions have been structured. I mean, it does bring a different level of conversation to what's going on. I mean, we're talking to the agents on the other side of the transaction a lot more about, you know, compensation. But I think what I love, I'm actually kind of liking where this is headed as a broker here in Lubbock, is our agents are having very, very solid conversations with the clients on the front end. You know, buyers, it's very transparent. It really has, it seems like it's heading in that direction where we're having more conversations about who's paying what. And then on the sell side, of course, when you're talking to a seller, yeah, just this is the advantages to what you do when you offer compensation, and this is the disadvantages, and vice versa. You know, so it really does. I think it brings a lot more conversation to the table, a lot more options. And so I think the landscape, in terms of how the actual transaction is taking place, I think the compensation layout is still pretty much the same as it was before. Our sellers are usually paying for compensation on both sides here in West Texas. And but what has changed is that conversation that has led up to that, and I do like the way that is played out.
Sally, what about you?
I would have to agree. I love the way the conversation has to go. I mean, and I'm on the corporate side. I have 16 different offices that I oversee. So I'd like the fact that they have to have the conversation. We are seeing probably a shift in some of our markets where the seller is really saying, you know, I understand it. I'm willing to pay it, but I'm going to wait and look at it in an offer. And so I think our biggest challenge then comes with agents that call and say, are you offering compensation? We say, no, the seller, we might. The seller wants to see it all in an offer. They want to look at all of their options. And then we have people say, well, I just can't show it because, you know, my buyer can't pay the compensation. So, you know, it's increased the level of conversations I am now having at a broker level with other brokers about how their agents are addressing it in their offices. So, but it's also I mean, that's opened up more conversation between brokerages. And I think that's always a good thing as well. But we're still seeing the majority of them being covered by sellers. But sometimes it's not until an offer actually happens on the property.
Same for you, Carly?
Yeah, I mean, like Ruben said, I do think there's a lot more transparency as it relates to compensation and who is paying what. And I like that. I think it's been a good thing. For me, my sellers don't feel so forced to commit to paying a percentage up front. But like both of them said, reality is they generally are covering the buyer's agent commission. I would say my sellers are 50-50 on whether they're willing to include it in the listing agreement up front. Some say, yes, I'll pay it. I want to be competitive. Others are saying, I want to wait to see the offer. You know, depending on what the terms of the offer are, I'm willing to pay it. But we are seeing some lowball offers in our market too. People are trying to really push pricing and you know, the concessions that they're getting. So, but I think it's been great. I've always operated with my clients signing a buyer representation agreement before I show houses. And I think the agents that haven't done that as a course of standard practice are the ones that have had the hardest time making a transition, just because they're not used to it. And I've done it my entire career. So those conversations aren't really any different for me. It's still, we're going to try to pursue this from the seller. But if they're not willing to cover it, this is what you're committing to. So for me, that conversation hasn't changed. I think it's more changed on the seller side and then also the agents. And I do think there's still some training that needs to happen with a lot of agents and their brokerages. They don't quite understand the new contracts, the new addenda. And I'm sure that's hard for you guys on the mortgage side too, to try to figure out like who's paying what. There's different places it goes now. And I just got an offer last night on one of my listings and the agent didn't do it right, but that's what we're seeing a lot. So I think it's just us all working together to make sure everybody understands how it needs to look contract wise and having those conversations. And I think the agents that are saying they're not willing to show a property because the seller isn't committing to a commission rate up front, are really missing out. They're doing their clients an injustice. And I hope that we see that change, but we are seeing that a little bit in our market too.
It's interesting.
Well, and I think another interesting piece of that revolves around working with the buyers and making the buyers understand too that they should go see every property, and that because you never know, what your offer is going to look like. For years and years and years, we've negotiated closing costs, and most sellers didn't say, "I'll pay closing costs up front," but we've negotiated in the offer, and buyers and sellers have had to make decisions about whether or not they were going to move forward with the transaction. So that's what we try to, consult with the buyers and have them understand that, we need to find the right home for you, and then let's figure out how we're going to structure the transaction.
That's good. Well, and I would say, at least in our market, to your point about collaboration with each other on both sides of the deal and the brokerages, the same thing is happening here with the lenders and the realtors, I think, because when we, like you said, Carly, when we get a contract, we have to know who's paying what and where, and if it's not clear, it gives us the opportunity to talk to the agents about that too. I mean, we try to stay in touch with them all the time, but so, yeah. Anything else on that? Because we got another few subjects to go to. Great. Well, thanks so much already for all your participation. You guys are great. The next one is sort of taking a turn around the corner, and it's about technology and tools. And Carly, in your bio, there was a little portion that I didn't read to everybody about how you love the technology suite. But the question is, are there any tools or technologies that you rely on to streamline transactions and enhance the client experience in light of all the different market changes? And I would add to that, how about AI? Are you using AI? Because that's a big buzz in the mortgage industry. So Carly, you want to start and you guys can address it?
Yeah, I've used tech in various ways and different websites and apps, really to streamline business, make it more efficient, make it more transparent for my clients. That was a challenge moving from larger brokerages. I'd always been with the big brokerages, and when I started my own brokerage, really trying to figure out which tools I was going to use and offer my agents. Since I recently switched back to Compass, it's been great just because they are very technologically advanced compared to most brokerages. They have a lot of tools on the back end for us as agents. And they actually just launched some new stuff. So we have a full CRM, we have automated marketing, we have all sorts of things that we are using. They just launched Compass One, which is like this whole client dashboard where they can see every step of the process, what the agent's doing, what's been done, as far as marketing and all of that. So I think that's been great. And there are so many tools out there. I don't think there are any that are specifically better than others, but I do think it's important that agents are using those, not only to stay organized and efficient, but also to make sure that they're providing the best service to their clients.
Yeah, well, the communication tools, right? I mean, some people want to text, some people want phone calls, some people want face-to-face, some people want, I don't know what, they want a robot. Anyway, Shelly, anything to add to that, or?
No, I mean, not really. I mean, we have all different technology tools to keep the client involved through the transaction. But, again, I think there's nothing that beats kind of a face-to-face and just, staying in touch with your clients and, making sure everybody's on the same page. I mean, I think just the conversations are the most critical piece of it, because that's what we do bring to the table. There is so much technology out there. We bring the people side of it to them.
And Ruben, from the standpoint of not being with a big national brokerage anymore, you probably have a little different perspective. One of the things I would love for you to talk about is the importance of the CRM and staying in touch with your people. And I want to tell a really quick story about Ruben. He already knows what I'm going to say. So I don't know, it was 4 or 5 years ago or so. And in the mortgage industry, I think that, some people are really good about CRM and some are not. Because I have, connections around that and talk to people. But Ruben called me one day and he said, hey, you you want to go to lunch next week? Now, Ruben's the realtor, I'm the lender, right? So remember that. So we make a date, we go to lunch next week. And in our conversation, I said, well, Ruben, what made you call me? That should be me calling you to invite you out to lunch because you're referring business to me. He said, well, I just got to be honest with you. My CRM told me to call you that day, and that was the way it was. And I called you. So I love that story. But anyway, Ruben, I'll stop talking and let you address both the technologies that you know and maybe a little bit about CRMs.
Yeah, absolutely. So yeah, being a smaller brokerage is interesting because we don't have all of the big tools that are backing up our technology. But what we found very similar to what Shally said is relationships are key, right? So if you have the right relationships and you are really staying in front of your clients at all times, the technology is really just a supplement to what you're doing. And so it's kind of just holding you up as you continue in business. And so, yeah, we've found what has worked well for us, our transactions. We have a great transaction software and we have a transaction coordinator behind the scenes, and all of that has been running so smoothly. And then our CRM is my big push, that we have two of us that actually lead Clear Rock Realty, Tanner Dean, and then myself. And so Tanner is our technology guy. So it's great to have that person where you can fall back on, because that's not my skill set. And I can touch into the AI a little bit and how I use that. But CRM, I created this program for our agents, and it's all about connecting with your what I call the top 100, and then it's just almost like a VIP treatment to get your conversion ratio higher with your Sphere and Sphere referrals. And we have to use the CRM in order for that to work effectively. And so we built that out in a way that it's a plug and play. I mean, if you just followed our system, you should have no problem getting leads, no problem building your Sphere and your referral based system, or your leads. And so yes, to Tom's point, he's in my database, and one is a friend, but secondly, I think the more we connect with our lender partners, the more that there is going to be some back and forth, and just continuing those relationships. I mean, I want to know what he needs from us, in order to continue building the relationship, and I know he's great at doing that with our company as well. So yeah, I think it's just a matter of finding the people, whether or not you think you're going to get business from them, or it's just, you need to stay in front of them because they're just great relationships. I mean, CRMs are for that. And I tell people, being in real estate just makes you a better friend in general. I think real estate agents, if you're a great real estate agent, you're a great friend to many, many people. And I think the same thing with in the mortgage world too. I mean, that is something I've talked to some friends of mine who are in they're lenders here in Lubbock, and asking questions about leads. And it's like, man, just get into a CRM. And yes, it feels weird calling somebody and sounding authentic when it's popped up on your screen that it's time to call them. But you do that enough times and you become a friend, right? And you're doing it. It's like a reminder, like, oh yeah, I do need to reach out to that person. So that's where I've gone with the CRM. And I don't think there's anything more important in our industry than having a well built out CRM and following that. And then real quick, I'll speak on the AI because I was totally against it when it first came out. One of those of like, man, it's going to take over our world, and we need to think for ourselves. And what I've realized is it just becomes a second brain of mine to think a little bit differently than I thought before. It's almost like somebody sitting right next to you and saying, well, just think about this angle. And so I actually use it a lot. I don't rely on it as like the end be end all, however that's phrased. And I just use it as a way to check things. I plug in my data for the market and just say, hey, help me interpret what these numbers mean, and let it kind of give me that angle. And it's worked out great because then I get to kind of compare my thoughts with AI's thoughts. And so I say me as an owner, but also a lot of our agents utilize that. I just tell them, don't make contractual decisions based off of what AI instructs you, but just still come to me, still, use your own brain to do these things. But it's a great, kind of a great sidekick, in my opinion.
I think it's allowed you the ability to kind of, like you said, pull your thoughts together and give yourself a creative way to try to position something. I've used it in presentations and things like that, because I hit a roadblock and I don't know where, I'm like, what do I want to say next? And I plug a couple of things in and it kind of gets your brain thinking in a different way. So I think it's good.
Yeah, it doesn't
Not
replace
to
you.
be relied on, but it does, yeah, it doesn't
Right.
replace.
Yeah. Well, and I noticed in the beginning of this meeting that there were a couple of AI note takers that logged into the meeting. And I would say, whether you're a mortgage banker or a realtor or whoever, those services, explore those, because when it comes to AI, that's one of the best tools. I do a little bit of coaching on the side, and with permission, I let the AI note taker take notes and listen in on the conversation. And then you're able to give feedback. You're able to, put that in your notes. It's so great. So side note there, but I don't own an AI note taking company, so that's not self-serving. I just think it's a great tool. So
I'll add something really quick if you don't mind. So like Ruben, I was kind of resistant. I didn't really want to get into AI. I was like, whatever that is. But in the past few months, I've actually started using it more. I don't rely on it for anything. And it's sort of been an experiment of, I'll even type in questions, things I would normally search for in Google. I'll put into Chat GPT, and the responses it gives me are usually much more thorough than what I would find doing a Google search and reading through a bunch of articles or whatever it is. So it's kind of improved in that way. I'm doing a new farm. And so I typed up a letter to send out and I put it in there and just got feedback on anything I should change. Our MLS system, maybe Houston, you're the same. I don't know about Lubbock. It just changed to where now it will automatically write AI descriptions for the photos. And it's kind of a joke here right now. It's so bad. I mean, it will improve over time, but it's like the AI descriptions will say carpeted bedroom with baseboards and visible vents. And we're like, okay, that's not useful. But I do think that it's going to improve. They just rolled this out, and people have been using it a lot for listing descriptions, all sorts of things. So yes, I mean, I was resistant, but I'm slowly getting into it, and I do think we're seeing it a lot more in all industries that kind of are associated with real estate.
Well,
Houston's had it for a while in the MLS for the photo descriptions. And I think, again, if you're not one that writes great descriptions, it's a good way to start and then adjust and make it your own words.
Yeah, that's the thing. You have to adjust it, and you can ask it to get to know your voice and the way you like to say things too. But I did, just on a final note on that, Dave Savage is a guy that is in the mortgage industry, and he does a lot of coaching, training, videos, that sort of thing. And he wrote an article yesterday, I think it was, about helping everyone to remember that it's AI and human beings, not AI instead of human beings. I thought that was a great way to put it. And in the mortgage industry as well. I mean, we can use it a lot in our side of things as well. If nothing else, just to come up with, besides the note-taking thing I was talking about, come up with finding rules and regulations and get, all the things that are putting a scenario in and just saying, hey, I got self-employed borrower who has this and this and this, and it can come back with some decent answers to, like you guys said, give you some food for thought, So great. Next one, advice for new realtors. For newer realtors entering the industry, what advice would you give them about building a successful career in this evolving market? That was the question, and I added this, especially as it relates to the lending needs of their clients. What would you tell a new realtor about that?
Find another profession.
Find another profession.
I'm just joking. No. As all of us on here on the call know, we've all been in the industry for a few years. Everything's just evolving. And, I think we can all agree, since COVID, our industry's evolved more in the last, we're right at 5 years now. I'm going on 18 years, and it's evolved more in the last 5 years than it has in the, 15 years previously, I was in the industry. And I just think anybody that's getting into our industry now needs to know a few, just a couple things you got to know. Like, you have to know a good lender. I mean, that's first and foremost, because, I have a deal today that it's closing, and then I have another deal that's supposed to close tomorrow where we're still waiting on the CED, as we all know. Like, that's a key part to closing. And, it's a new construction deal, so I had no control over the lender because they used the preferred there. And I mean, I tell all my agents, the newer agents, like, you need to get a very good lender partner, because lenders can make you or break you. I mean, their knowledge, knowing all the ins and outs, living in Dallas, we have lots of condos, and that's a whole nother animal.
Yeah.
If lenders aren't familiar with that kind of stuff. So, that's from a lending side for a new agent, I think it's paramount, as far as like who you work with, the type of deal you're doing, things like that. So, kudos to all the lenders that know the ins and outs of what types of transactions you're working on.
Well, and don't you think too, when it comes to lenders, not just, Ruben said it earlier, be a friend.
Sure.
Lenders should be a friend to their realtor partners, and realtors vice versa, because then you can trust each other and you can bounce things around, and you can say, hey, Shally, what did you do that on that contract for? Or you could say, Tom, come on, I need a little more communication here. That you can do that with friends a lot better,
Sure.
Okay. Sorry, folks. Anybody else have something to add to that advice for new realtors?
No, I would agree. I think you have to have a partnership and find someone that you can trust as well. And I find that newer ones don't have as much trouble as the ones that have been doing it differently for a long period of time. So, I mean, because they don't know any different. So some of our
Sure.
newer agents are having no problem talking to buyers and sellers about the forms. They have no trouble reaching out and asking questions. I just encourage them, as one of my managers said today, come to us because they can fire us if we make a mistake. Don't go to the other agents in the office who may not really have the right answer. They may have the perfect answer, but trust in your leadership too to help you through the transaction.
Well, dare I say, at my age, you can't teach an old dog new tricks. Is that what you're saying?
You can, and there are some that are very teachable,
Yeah,
so
right.
I
That's
have
the
plenty
thing,
of ones that
yeah.
have been in the business a long time and have embraced the change very well.
Yeah. Yeah. Ruben, looked like you were thinking something there.
Yeah, one thing I practiced as a new agent, and I think any agent that comes in our office is the two things: be the expert, be the friend. Right. So we're real big on relationship building. You walk in our door and that's all we're going to be talking about is building relationships and how to do that well. But none of that really matters if you don't know anything. And so those two go hand in hand. And the same thing, you can know everything, but that doesn't matter if you don't have deep relationships. And so we really hammer on both of those things. And I think the be the expert part is one that can be easily forgotten. I think people just kind of wait on their first transaction. And my advice to new agents is go ahead and just start practicing, right? Start understanding what are the different areas in Lubbock that you need to be focused on. What are the different programs for lending? Because those questions come up and you don't know the questions until they do. And so just getting to know as much information as possible. And I think the lender partners do help with that. We do a lunch and learn every Monday in our office. And one, it brings people in together because they love free food. So that always gets people in our office. But secondly, we do it to vary up in the industry. We'll have, a lender, we'll have title companies, and then we get into even like inspectors and electricians and plumbers. And we just want them to come in so that our higher level senior agents will ask questions that the new agents don't even know they need to know anything about. And so it really does help bring a lot of insight. So we try to bring in as many different angles, different scenarios as we can so that new agents can learn. And so my advice would be show up to these things. If a lender wants to take you to lunch or coffee, don't be afraid of that. Jump into it and then just start asking every dumb question you can think of, just to get your feet wet.
That's great. Carly, do you have anything to add to that?
Yeah, I think I was really fortunate when I first got into real estate. I never joined a team or anything. I always started as a solo agent. And so I had so many questions initially, but I was grateful that I had a mentor that immediately introduced me to her preferred lender and her preferred title company, escrow officer. And it really, you need a team to succeed. And especially when you're starting out, I didn't want to call my broker with every single question, right? So I would call my lender with certain questions, and I built a great relationship with him. And I have other lenders too, but that he's referred me leads over the years, but he was always a great resource for quick questions and so patient I have this buyer. I didn't understand the difference really between conventional and FHA and VA initially, and what the differences were and how much you could ask for, in concessions and all of those things. So I think having a good lending partner really can make a big difference in your level of expertise and what you can offer to the clients. And for those of us that have been in real estate for a long time, the difference between a great lender and one that doesn't know what they're doing. And it can make or break a transaction. I mean, I've only had a couple times that I have let clients use a lender that I knew was probably not going to be great, and it didn't go well. It's up until closing date, and all of a sudden they can't close. And so I'd roll it to one of my preferred lenders and they would get it closed really quickly. So I do think it's important for new agents to build a network of experts in different fields, because everyone has something different they can teach you and they can offer. I did go to a lot of lunch dates and coffee dates with lenders when I first started, because you have time, right? You're not busy yet. And I learned something different from each of those. Everyone has a little bit different perspective, and I think that's good. I think as far as the other thing goes, and you guys are numbers people, so you get this, but so many realtors are not. They don't track their numbers. They don't know anything. And so for me, I've always encouraged agents to have a business plan, set some specific goals that you can try to achieve, and then let your lending partners know, like, they can help you get to meet your goals, but track your numbers, how many transactions you've done, what you've sold. It's just shocking to me how many agents have no idea. They just don't know. And I'm a big spreadsheet person, so I always keep track of everything. I've got all my stuff, but and there's successful realtors that don't do that. But I do think it's helpful to be able to have a business plan and track the numbers.
Yeah. That applies to the mortgage world too. I mean, just a simple statistic like let's just pick a random number. Historically, I've closed 40% of the applications I've taken. Okay, well, that means that you've got to have that many. If you want to close 10 loans, you got to, have 40 applications, that kind of thing. So it works in our business too to know those numbers. Well, we have about 12 minutes left, and in a minute, I want to give the audience a warning. If you have any questions for these folks, please put them in the chat right now, and we'll get to them in just a minute. But I would like to ask all, I'm not sure if Joe is with us or not. He had an appointment that he had to,
I'm here.
Oh, yeah. Well, I'd ask
I'm going to
each
jump
one
off in just a minute. Yeah.
Okay, well, then you can go first.
Okay.
To give us just a closing thought or two about, especially about relationships with the mortgage industry and how that helps you or hurts you.
Well, like I stated earlier, is lending partners can make you or break you. My main trusted lender I work with, funny enough, I took a summer school class with him back when I was at UT a long time ago, and we reconnected at a MLS meeting here in Dallas in my second year in real estate, and just naturally already knew him. So, we built a relationship, and, the number one thing that I always remember of why Scott became my main go-to lending partner was he was on his honeymoon, and I was dealing with my biggest client to date at that time. And I think they were in Italy or somewhere like that. And he ran up a $600 phone bill answering my buyers' questions.
Wow.
And I was like, wow. So he works just as hard as I'm working. So, like, it was done. I was like, you're on your honeymoon. I don't expect you to do that, but you went above and beyond. And, you know, we've had a relationship now going on 16 years. And, you know, with Scott, that's how he is. He will be on vacation, be wherever, and he always answers his phone. And as realtors and brokers, we always have to answer our phone. I mean,
Yeah.
you know, so we kind of expect the same out of our, you know, partners. And, you know, just going above and beyond and just really just knowledge, you know. I mean, you know, like he can get out in front of a deal when he knows there's tight DTI, this, that. He can get creative. And I think that's the main thing where lenders separate themselves with me is how creative can you get? Because I've had a deal where I'm using another lender, actually deal I'll reference, I'm on the sell side. And I knew the lender on the buy side, but you know, 5 days before closing, for whatever reason, he says he can't get the deal done. Well, I run the scenario by Scott, and he's like, well, I don't think he's doing this workaround, yada, yada, yada. I think I can get it done. So basically, I tell the buyer's agent, the only way we're going to continue to work with you is if you use our lender. And Scott ended up getting it closed 12 days later. And to the point that the agent on the other side then started using Scott as his preferred lender because he's like, man, he knows. So, I mean, it's things like that is what makes us really value a lender, like who can, you know, think outside of the box and really understand how to get a deal done.
That's great. Thank you for that. So Carly, what about you as far as maybe some final thoughts on the market and the future, since I saddled you with that question earlier?
Well, I think Texas is one of the best real estate markets in general in the country. And, you know, I think all of our major metro areas have always been in the top, not always, but, you know, in the past 15, 20 years, been in the top list for the country. And so I think we'll still continue to have strong markets all over Texas. We have a lot of major companies that are moving to different parts of Texas for tax reasons. I mean, I just heard what KFC is going to move from Kentucky to Texas. Like,
yeah,
that's crazy. So I do think the market's going to continue to pick up. I think this year, you know, Austin historically has had like a 7 to 10% increase per year. I think this year we're probably going to be closer to maybe 2 to 3%. So it'll be relatively flat. I think it'll slowly go back up a little bit. But who knows? We'll see. I mean, I think there have been so many things that have happened, especially, you know, in the past 5 to 10 years that I would have never predicted. So you never know what's going to happen. But I think for all of our markets, it should continue to go up now that we're past all the COVID stuff. And I don't know. I'm optimistic for our market here for sure.
That's awesome. Thank you for that. So Shally, final thoughts. And I'm thinking about maybe speaking a little bit to the administrative side of things, because that's your forte, both, you know, in your business and in ours.
Well, and interestingly enough, we had a company town hall this week, and you know, we were talking about the fact that, I mean, we deal with the biggest change people make in their lives. A move, you know, totally uprooting your life and making that change. And then we all resist change. So I would say to really be open to the change and try to adjust to it. We've done a lot of things differently. I was actually on the committee with Texas Realtors that rewrote the forms. And so I spent a lot of time digging into it over the last 18 months. I started training to it in our office. You know, about 18 months ago. I mean, you know, embrace the change. It's coming. You're not, you know, I mean, just be ready. It's going to happen. And I think we mentioned it earlier. In the last 5 years, we've seen a lot of change, a lot more than we've seen in the prior, you know, 10 or 20 years. I mean, I've been in the business over 40 years, and it's continuing to speed up the type of changes that we have. So I would say embrace it if you can. just try to, ask as many questions. We actually have written out every possible scenario that can come in a contract. We've done it with our company policies, on compensation in it. And I've done a generic one that the agents can go hand to somebody and say, this is the form you're going to need. This is the way you're going to have to fill this out. So, and I would just pay attention to what's coming across your desk too, because each contract is different in today's world. And so, people are missing things and then they're upset. And so I think we just all have to, dot our I's a little bit better and pay better attention, but also be open to, the other side of the transaction. We have to work together. All parts of it, the lending side, the title company, the buyer agent, the seller agent, so it's just a lot, but
yeah. Well,
it's a great
thanks for
time to
that.
be in the industry.
Yes, it is, and it's going to continue to be. Ruben, just 2 minutes on leadership. Your final thoughts.
Yeah, leadership. I'm passionate about, right? Started a podcast not long ago, just all about that, and have the privilege to meet with some amazing leaders here in Lubbock. And some of the things that I hear over and over again is just consistent care. Obviously, it's so obvious, but it's your character matching up with what you say. And so I think everybody sees that, whether it's your online presence or whether it's the way you handle a transaction. I think people just want to see consistency in who you are. And so as a leader, as we're leading, and whether you're a lender, leading in your office or leading a transaction, really just not being one saying that you're a certain way and then acting, a different way, being super consistent. So I've got a really cool privilege to sit on this side of the table when I'm interviewing people, because it feels very selfish that I get all this time with some amazing individuals, and I love it because the insights are awesome, but it's also, it's just so simple, right? It's all the same message in different twists. And so, yeah, just be consistent.
Excellent. Thank you for that. And by the way, Vicky Murphy just put in the chat that she caught your podcast. And she's from Dallas. She's from Dallas.
That's great. That's
well,
really cool.
I just want to say thank you to all three of you, and I'm going to turn it back over. Let me finish that statement. Thank you, because you've been so engaged, all three of you, and Joe too. He had to drop off, but I'm going to toss it back over to Scott and see if there's any questions and any outro information.
No, Tom, we don't have any questions. So, and we're just have a couple minutes left. So I think we can wrap it up, and just want to thank you for a great job, and thank the panel. Really appreciate your time for sharing your knowledge with us. And just want to remind everyone that the TMBA continues to work on bringing you great webinars like this one. So please check out the homepage at texasmba.org for the upcoming schedule and watch those emails. So thanks again, everyone. Really appreciate everyone. Have a great day.
Thank you, folks. See ya.